FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
And welcome. You're listening to the Financial Survival Network. It's Kerry, Lutz, and hey, markets in turmoil. Gold and silver look like perhaps they put in their bottom finally after 3 years. We don't really know for sure. Too early to tell, but we've got Rick Ackerman of rickackerman.com on with us now to get an idea of where the stock market's heading, an idea on gold and silver, and more. Rick, hey, Happy New Year. Welcome back. How are you?
Happy New Year, Kerry. Thanks for inviting me on.
As always. So we're in turmoil right here. The world economy, the euro, the ruble, the yen. The world is a total mess now. And how does an investor figure out what you should be doing?
Well, it doesn't seem any messier than it was at the end of 2014. It's been pretty much the same old game, really. If you look at the real world, yeah, it's a mess, and you can't, it's difficult to see why stocks would keep moving higher and higher and higher. But of course, that's just a function of global easing. There's so much money out there jangling around that with just a little bit of it trickling into the markets, Kerry, it's enough to keep things buoyant. And of course, you've got short covering to push stocks through old levels to new record highs. The short covering in particular is of a kind of buying that supplies the real power to this bull market. So I don't know. It's obviously an interesting start to the new year, and it's difficult really to adjust to the idea that maybe something fundamental has changed. But for sure, we're off to a very weak start this year.
Yeah, and if you believe in the January effect, if it doesn't turn around soon, it could mean a down year for the market. And, well, the economy has been in the doldrums for years anyway, since 2008. The stock market's been really divorced from the real economy for years, so maybe the stock market's just going to acknowledge what's been going on with the real economy anyway, right?
Well, I don't know. I've been a perma-bear forever, but on a technical basis, I've been able to see things going higher. I just call them on a more or less mechanical basis, so that's kept me honest. But in that respect, if you really think the markets, that something has changed, you have to answer the question. If you're a money manager and you wake up one morning, what's different? And you have to believe that these guys are going to change their minds. It's a pretty easy one-decision life for them to simply take other people's money and throw it at the market. So if you believe that we've begun a bear market, then you have to answer the question, why did these guys wake up with the dawn of 2015 and think, well, I hate stocks here, I'm going to start selling? And I don't know. The only thing that's changed in the big picture is crude oil. But even there, it's hard to believe that the markets have not bought the positive side to that, namely reduced cost for consumers. The negative side, the extent to which the whole global financial edifice is leveraged to energy prices, is very much a negative. It has potentially catastrophic implications, but it's always hard to think, well, it's hard to believe that the catastrophe is underway.
Mm-hmm. And I mean, you look at being a perma-bear, and yet for all these years, the market's been going up, and, you start feeling like, hey, are you a stopped clock, right?
Yeah. Well, as I said, I've always tried to keep my technical forecasts separate. If you look at the real world and look at the markets, you think they're in some sort of warp. They absolutely have no connection to reality. And I think that's demonstrably true. But just the same, as a forecaster, I've got to get it right. And the only way I can do that is to consider purely mechanical factors that push the market higher, that give me these, what I call hidden pivot targets. The most interesting of which, as I mentioned, was 2105 basis the E-mini S&Ps. We're currently trading well fell below that in 1995, so we'd need a rally of about 110 points here, equivalent to 1,000 Dow points to get up to that target. We were within 20 points of it at 2014's highs.
Mm-hmm. So, yeah, well, and then again, this thing could just be a minor correction and just shaking out nervous people, nervous investors, of which that there are many of you out there, and then it's going to keep going higher. That seems to me more likely because, look, Rick, if you look at the rest of the world, the markets in Europe, in Russia, in Japan, in China, the money is coming into the U.S., right, as the last man standing, right? The flow of funds in the world, it's coming to the U.S. I mean, there is no two ways about that. The flow of funds is coming to the U.S., and that's why the dollar is so high. I mean, there's no other explanation for it, right?
Well, it seems obvious now, but very few gurus were explaining that way three months ago. For my part, I've been absolutely on the rooftop shouting to essentially go long-term treasuries. And the way we've done that at Rick's Picks is to go after a vehicle called TLT. It's an exchange-traded fund that tracks the bonds with 20-year or more shelf life. And, every time it dips, we buy on weakness. Typically, we buy call spread. So in this case, when it dipped down to a 122 and change target, we bought options at a 126 strike for 80 cents. We got a heck of a rally, and we were able to short options of a 129 strike, three strike prices higher, for the same price. So we basically put on a $3 vertical spread for nothing. And it's about to come in right now. It's more or less a guaranteed profit of $4,800 on a position with zero risk. So as I look at the bonds, they're just going to go higher for the reasons that you mentioned. When you look at the rest of the world, it's a pretty sorry mess. Europe is never going to get out of the hole, so it's going to keep slipping into recession. And if you had your choice as to whether to park your hard-earned capital in European assets or U.S., of course, you'd go for the U.S. So that's what we're seeing. We're getting, to some extent, a global flight of capital into the dollar, and we've got a huge unwind that remains because basically all the fund managers are very heavily weighted in stock still, and they're going to have to get with the program here in fixed income. So what we've seen, this huge rally in long-term treasuries, is really just a warm-up for what we're going to see.
Yeah, and meaning it can go way, way higher, and, who knows where it can wind up, regardless what the real economy is doing. And that really is the amazing part of it all, that this thing can go so much higher. The old saying, stocks climb on a wall of worry. And that's exactly what they've been doing here, right?
Broadly speaking, yes. But, the market has been such a one-decision creature. It's like you give your money to the fund managers and they simply throw it at the market. We've seen more and more money come out of managed funds and simply go into indexes because, none of these geniuses is beating the averages. It's like you just put it in the S&P 500 and let her rip. So I tend to think that nervousness has been in short supply. Bulls have had a kind of no-brainer going since March of 2009. Now, who knows? Maybe a little bit of brains are coming into play, and you have to be more judicious about stock picking. But that would certainly be a watershed change.
Yeah, boy, would it ever? Because it's kind of like the Nifty 50 back in the 60s. One decision stocks for life. You just buy those stocks like Apple, and you just watch them go, and they make you rich, and you retire on them, right?
That's the way or so it went.
Yeah, but things never stay the same. We know that. And, hey, they're not going to stay the same this time. They're going to change. And, the one thing that's been troubling is that the volume, the small investor, the retail investor hasn't been present for much of this rally. And question is the retail investor coming back? Is he ever going to be back? Is there a fundamental distrust of the small investor where they just have been nailed so many times and they're just saying, nope, not again. We're not falling for it this time. You have to wonder, right?
Well, I would say no one ever went broke overestimating the stupidity of the small investor. But to say that we have to, we haven't even been to that part of the cycle where the little guys just sort of pile on. Well, in order to believe that, you have to think that the Dow is going much higher, sort of, 22, 23, 24,000, because that's really what's implied. And I'm not quite sure I'm seeing it. There's really too much weakness out there globally. China, when China's growing just 7%, that equates to recession there. And as we're all agreed, Europe is not coming out of its funk. And of course, Japan is. We've written off Japan for the last 20 plus years. So the U.S. is the only game in town. But I still. It's hard for me to come around to thinking, well, we've got one huge move up where the little guys are all going to get sucked in, and I wind up watching certain bellwether stocks. I don't think it's over for Apple, for one, but if Apple doesn't get in gear, then the market's not going anywhere either. Apple, of course, is the largest capitalization stock in the world. And the story is genuinely bullish. They do a lot of things right, and even without selling hardware, if they're just taking a little piece of every transaction through Apple Pay, then the stock's a buy. So I'm keeping a close watch on Apple here, and we're even doing a little bit of nibbling today on weakness.
Yeah. And that's interesting to think that Apple can just keep going up and up, but it's kept doing it throughout the history of the stock. Their products, their latest products, their iPhones have really taken back market share. Who knows what the company's capable of? But hey, more on that when we return on the Financial Survival Network.
FSN Radio. It's all about what's next.
Every week the show is growing. Would you like to be a part of it? Then go to clubfsn.com and help support us with $1, $2, $5, or $10 a month and get a host of premium content with newsletters dropped into your mailbox, free books, private audio clips, webinars, and much more. Then join clubfsn.com. If you want to get ahead of the trend and ensure your family's financial security before it's too late, go to clubfsn.com and sign up.
The Financial Survival Network. It's all about what's next.
And in case you just joined us, we are speaking with Rick Ackerman of rickackerman.com. You can sign up for his free daily newsletter, Rick's Picks. Just go over to rickackerman.com. I read it every day. You should too. And Rick, Apple, you'd think that so many times you've come to believe it's just a mature stock, a regular, industrial stock that has seen its day, and now it's just going to be income or dividend play. And yet it never ceases to really amaze the naysayers and frustrate them. I mean, it just keeps growing. The earnings keep going up. Cash keeps increasing. And not to mention the occasional stock buyback. But the stock seems to be a growth stock, even at this phase in its development,
Well, it's definitely not a stock that you can write off, especially with Apple Pay in play, as I mentioned. Stock currently trading 109, but I've got easy upside to 129 and change. So I'm expecting Apple to turn around. I don't chisel these expectations in stone. So, if something happens, if the stock keeps coming down and it breaks beneath some lows on the weekly chart, I'd have to reconsider. But right now, looks like we've got a rally to at least 129. That's my target in Apple. A $20 rally from here would be a little less than 20%. So when the biggest cap company in the world experiences that kind of rally, you can imagine that it would have bullish coordinates in the broad averages.
Yeah, just it's just amazing to see, I mean, I've been involved with that stock since I bought my first Apple II Plus back in the late 70s. It wasn't a very useful product, but nonetheless, it did things that nothing could do at the time. And, it's had its ups and downs, but certainly since Steve Jobs returned and even after his passing, stock has been on a rampage. So we're looking at the market. You've given your opinion there. The euro, basket case, the yen, the ruble, all these other currencies other than the dollar. You see the dollar is at 92 something. Don't have the latest numbers in front of me, but the dollar, actually, I'm looking over at Kitco now. The dollar index, it just keeps going up. It's at 92.05, down a little bit today. I should say the date is January 14th. So dollar, is that a good play, do you think? Can we play that in a relatively low risk fashion using the hidden pivot system?
Well, if you look at the very long-term charts, the dollar has really just embarked on a bull market. The dollar index has been much higher, currently trading 92. But if you go back to the year 2001, dollar index was up around 121. So there's huge room there between where it's trading now and the all-time highs. But that said, on the monthly chart, the dollar index has just broken out. We've had some key peaks that stretch all the way back to 2005. And with the big rally that we've had in the dollar index in January, it looks like we've just, the high so far, 92.53, and that very important peak in November 2005 was just 10 cents higher. So far this month, then, we've been within a dime of a very key breakout. And what it means, once we get that extra dime and we pass that high from 2005, any pullback should be assumed to be corrective. So, but even to get a little bit ahead of that, the dollar looks like it's in just a breakaway bull market as I speak.
Amazing. And, just a few short years ago, many of us, myself included, were looking for the demise of the dollar. Although I must say, my personal belief was always that the dollar would be the last fiat currency to go. Still might be the case. Who knows? But as far as gold and silver, precious metals, any technical observations where they're at now?
Well, I've got an over-under bet in gold. The rally is encouraging, but I have to say that, I've been stung like so many other gold investors just getting in early. So let me give you the worst case first. I think that gold basis, the COMEX futures contracts, could come all the way down to 810. Currently trading 1238, so that would be a sell-off of about a third from here. However, more immediately, the signs have been bullish, and if they keep going, then it won't absolutely negate the 810 target, but it'll certainly put it on the back burner. I'm looking for 1264, so currently trading 1238. We've got about a $26 rally in gold before it hits that target. And if it does that, some bullish things are going to start happening on the longer term charts in gold. And when I do what I call a reverse, I use my own analysis method called the hidden pivot method. When I do what I call a reverse pattern, I could see as high as 1343 basis the March COMEX contract. So even there, we've got $100 to run. I'm just going to wait and see. But it looks to me like gold is very much feeding off weakness in the broad averages. And that's a little bit suspicious to me. I'd like to see gold kind of moving up even when the dollar and when stocks are moving higher. But the way it looks to me is that gold is having its best days when the stock market, when the broad averages are having their worst days. So that's a bit of a crutch, and it's somewhat of a concern. And also silver is a definite laggard here. Whatever I can find, technically speaking, that looks promising on gold's chart, silver is just kind of a stick in the mud there. And if bullion is headed higher, it looks to me like gold is going to have to pull silver higher because silver has been noticeably weak.
Yeah. So the full story isn't out, obviously, on gold yet. And hey, the news on crude oil and the energy sector continues to deteriorate by the day, doesn't it?
Yeah, and I do have a target down at $31 on crude. Keep in mind that my targets, 50 and 40 and lower, were out there when crude was trading 80. And I remember at the time that I put out these horrifically bearish targets that the consensus among my esteemed colleagues was that OPEC would draw a line in the sand at $70 a barrel, that there's no way they would let it slip lower. So my forecast for sub $40 oil has been there since crude was up around $80. So I have, let's say, a little more credibility than most of the forecasters out there, and I do think 31 is a prospective low. More immediately, I've been looking for a bounce. This would be basis the March NYMEX crude contract off, I think it's 43 and change, $43.58. So we might see some sort of interim rally, or that actually may be underway now.
Interesting. So lots happening, and just buckle your seatbelt because things are happening really quick. Rick, people want to find out more about you, sign up for a free trial. How do they go about doing that?
Just go to rickackerman.com, and you'll see in the upper left-hand corner there of the home page, there is a sign-up for a free 2-week trial, no-risk trial, and you can also sign up for a daily mail-out that I do. Usually there's an actionable trading tout that goes out, and I put out a weekly commentary as well. But if you take the free trial subscription, you can come into my chat room. It's a 24/7 room that draws great traders from all around the world, and they're a very helpful bunch. I encourage people to come in there and ask questions, and it's a terrific place to touch base with some traders who are really on top of different markets intraday.
Yeah, well, that always helps, especially when you're starting out, when you don't necessarily know a whole heck of a lot. And Rick, it's great talking to you. We'll look forward to touching base with you, seeing how this thing unwinds, because at some point, every bull market does go bust. And no doubt the stock market will be no different. But hey, nobody knows when that date's going to come. So be on the lookout. Right? Keep your risk at an absolute minimum and follow Rick's picks, and it'll help you do that. So thanks, Rick.
Thank you, Kerry.
FSN Radio. It's all about what's next.
Every week the show is growing. Would you like to be a part of it? Then go to clubfsn.com and help support us with $1, $2, $5, or $10 a month and get a host of premium content with newsletters dropped into your mailbox, free books, private audio clips, webinars, and much more. Then join clubfsn.com. If you want to get ahead of the trend and ensure your family's financial security before it's too late, go to clubfsn.com and sign up.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.